Alright, so recording is up and we'll start now. So, yesterday we had a bit of discussion about the setup and the trading plan. We had the setup right here, and we had this. I explained the trading plan in the form of rules right here. So, now there are two things which I will be going over in today's session, and that is people still coming. So there are two things that I will be covering in today's session, and that is some practical scenarios of this specific pattern and the higher time frame bias, and how can you use that to increase the probability of your setup. But before I jump into that, we'll just have a little bit discussion about something interesting, I would say. So that is like you guys are one of the few who came forward for this specific webinar because like Jay has 3,000 plus members in his channel, and so do I have. So you are like 27 people, and you're the ones who came forward to attend this webinar session. So by no means we would teach you something that is not worth it. Like, we are trying our best. We would try to teach you something that is really worth teaching. All right. So I personally have like 7 years in financial markets, and in a nutshell, if I would say that if there is something worth to tell somebody or teach somebody, and that is to have an edge through a proper trading plan. So a trading plan is really a must thing. You have to you have to have. All right. So uh, in this specific webinar, I explain this setup, but you are not bound to follow this. All right, like uh, I wanted to. The main focus was to emphasize on a specific trading plan. What will you can make your own one, and backtest that as well. So it's not really important to just follow this. Obviously, it's a good setup. I have back tested it. I have live tested it, and that is incredible setup for me. But as a follower, or you'll follow everything. But as a student, you have to look out for something else if you really want to. All right. So you're not bound to follow this. You can obviously look out for something else which is working for you, and you can refine that according to yourself. And about refining, I would give you some examples, like how can you refine your things down. So for example, in this specific setup, we had this momentous move. All right. So uh, let me just grab my this right here. So this wave right here, I've drawn it here, and I will explain like how can you refine, and how can you refine your problems, and how can you solve your problems, actually, like the possible solution of any problem you're facing when you're developing your trading plan. So for example, like in this specific wave, uh, you probably know that this is Quasimodo level. All right, this is QML. All right. Now we also have where's that? Here, I will just make a favorite. So we also have uh, something like a breaker block right here. All right. We also have an auto block right here, and obviously, if the move is a bit highly momentous, then we would have some favorable gap in between as well. All right. So here comes the possible problem which you might face, like which I faced when I was backtesting this setup. So I was looking like if the price is coming down, like would it react from this favorable gap? Would it react from this breaker block? Would it react from this crossing mirror level, or this order block? And obviously, uh, the move is not really that much simple. It could be something like this. That's momentous move. We had a bit of that, and all right. So I've drawn this specific wave, this arrow right here, and you may say that this is an order block as well, and we have an extreme order block as well. So this is a situation where you would get confused, like if the price is reacting of this, would it be reacting from this or that? All right. So I faced this problem when I was developing this setup. So to instead of briefing, instead of briefing or crying about that, we have to look out for possible solutions. And what solution I found was this golden ratio. All right. So that is how you simplify things. When things are getting complicated, you don't make things more complicated. You just try to make things simplified. All right. So we have another example right here, like you know. I mentioned previously, like this level was getting stop hunted by price by few pips. So what I did, instead of trying reefing over that, I did some sort of mechanical thing right here. I took out this number of pips, I divided that by 3, and we have a stop loss below that. So that is how, if you want to make your trading plan, you try to find the solutions like this when you are facing some sort of difficulties in making your trading plan. All right. So that's it for that. Now we'll jump to some practical scenarios on this specific USGBP pair. All right. All right. So here's our Asian range. All right. So Asian range has formed, and our rule number 1 was to have an Asian range form. All right. So we have this right now. All right. So second thing was we want to have a fake out. So look at this. Did the price got the momentum? Did the price immediately came back? Alright, we know the answer. Like this was a fake out. Alright, so we had a liquidity hunt right here. We have some good momentum. Look at the volume of this candle. That definitely shows that the momentum was pretty strong. And just look how recent this setup appeared. Like it appeared on 23rd of June. So rule number 2, liquidity grab, and rule number 3, the momentum. Rule number 4, we have a structure shift. All right. So so rule number 5 was to wait for a swing low or swing high form depending on where you are aiming for. So obviously we are looking for some short setups. So as soon as this candle prints out, we know that we have a swing low form. So we will place our Fibonacci from this swing high to this swing low, and we know that we want to wait for price to tap in that 0.618 level. All right. Let me just move that. Perfect. So we want to wait price to hit that level for us to get in for an entry. Now I will place my stop loss according to rules around this level. All right. Now we'll count the number of pips of this region, this zone. So that is 7.7. So 7.7 divided by 3 makes it to 2.6, round off to that, 2.6. So we will just increase our stop loss 2.6 as well. So that is currently 7.6. So 2.6 makes it to 8.6, 9.6, 10.2, 102. I guess I'm right. So here we are, 110.2 pips. So we'll display the price and see. So here's our tab. All right. All right. So at this point, we know that we have our rule that we have to take partials and move our SL to break even at 1:1 ratio 2. So we definitely got. No, we still didn't draw that. Let's see. We play the price. Right. So at this point, your 1:2 ratio, just got hit, and at this point, you will close 50% of your position. For example, if you are trading 2 lots on this, you will close 1 lot and you will keep the one running. All right, and you will keep the one running. You will check partials definitely, and you will move your SL to break even, and you will aim for my bad, and you will aim for 1:4. All right. So we'll display the price and see. Here we goes 1:4 hits. So let me just go over a few more examples. All right, this. So right here, if you notice, we have our Asian range form. We had this specific resistance, like you can consider this Asian range as well, but we have to get some sort of flexible as well. We have to look out for something else. So we had these equal lows, relative equal lows, and some sort of retail support as well. So price clearly grabbed that, all right, and we got a nice momentum to the upside. So we have a rule number one, Asian range form. We have liquidity grab. We have a good momentum to the upside. We have a breakup structure. So at this point, we will draw the Fibonacci. But if we notice, I did place my long two right here. But if you notice, look at it. This week right here, around tap that. But look at the Fibonacci placement. I placed my Fibonacci on this high right here, all right, on this high. So obviously the wick that occurred previously tapped that, we don't count that, all right. So that was actually a missed setup. That was not an entry because this wick right here tapped before a swing high was formed. That is not our entry. We have another member, all right. So we don't have an entry right here. So moving next, we have Asian range form. We have a liquidity hunt right here. We have a breakup structure right here. No, we don't. We have a breakup structure right here. Like this was the last low. So price broke there. We have the good momentum right here. So we place the Fibonacci. It's oppositely placed. My bad. So we place the Fibonacci like this, and that was clearly what's just a second. What was the issue? Why I have a long setup right here? I'm not sure why I placed long setup. But regardless, even if it was long or it was short, in both ways we got stop out. So definitely losses are inevitable. You can't avoid losses. Whatever you do, whatever plan you make, whatever trading plan or strategy or something, well, you will have losses. So losses are inevitable. You can't avoid losses. So let's move here. So we have our Asian range form. We have a liquidity hunt right here, and we got a momentum. Do we get a momentum? No, we clearly don't get a momentum right here. All right. So this is a not an entry as well. Oh, my bad. I was actually looking at 30-minute, while this setup was on 15-minute. My bad. Sorry, guys. I was looking like what's the issue? I placed these because I look at that. So yeah, I know why I placed long setup because look at this momentum right here. We had a clear break of structure. Like this was a break of structure, but look at the momentum. The momentum was extremely weak right here. So we do not take the sell setup, even though that might have been your not that didn't actually. So we had a good momentum right here. We had an Asian low being taken out. We had a break of structure, so I placed long setup right here. So similarly, moving right here, look at here, price goes up, comes down, goes up, comes down, goes up, breaking the structure. We had good momentum. We had, look at the immediate retracement back within the range. We clearly have a good stop on a liquidity grab below this Asian range. So at this point, at this point, so at this point, you know that the swing high is formed. So we draw the Fibonacci from swing low to swing high, and we wait for price to tap in that 0.618 level. And here we get the tap. We at this point got some sort of 1:2. We close our trade 50%, and we move ourselves to break even, and we let the trade run. So yeah, it hit GP. All right. So moving next, look at here right now. Just look at how many times this setup has unfolded, like 16 June, 17 June, 20 June. We missed an entry right here, but the directional bias was on point, and we had another one on 23rd of June. So look at how this setup has played out beautifully on your GBP. So right here, we had a clear hunt above these highs. All right, we had a clear hunt above this Asian high like this. We had a breakout structure. Look at the momentum. The momentum is beautiful. At this point, you know that you have to draw your Fibonacci drawn. This little red candle tap within this 0.618 ratio. We calculate the pips. We add that to our stop loss, and we aim for 1:4. At this point, you would close 1:2. You would close your 50% move yourself to break even, and you'll have your position running for 1:4. Right. So we don't have anything good right here, or maybe if you want to consider, we might have one because this was price was going up. It did some sort of pullback. This was the high right here. Price broke that high, and this was the last structural low. So this was the last structural low. This was the last structural high. So there are two things which you need to have a look at. So this was the last high which got broken, and just look at how clear these equal highs are. If you just zoom in, can you notice the equal highs? You definitely would have. So we don't have a proper liquidity grab, like we do have a liquidity grab above the Asian high, but look at this. But even though if you just neglect that, we have a breakout structure, we have a decent amount of pullback, but momentum. But was price able to push upside and give an entry before the next Asian range start? No, we don't have, so we don't count that. But regardless, look at how the direction bias was on point. Same thing here. We had a liquidity grab right here. This was the last structural high. The price broke that. We had a good momentum. So instead of price pulling back, it just went up and never gave an entry. So, so right here, this was the Asian range. We had a clear, a break to the downside, grabbing this Asian low. So this was the last structural high. Price broke that, and as soon as this bullish candle formed, you know that your swing high has been formed. Like, uh, yeah, your swing high has been formed. So at this point, you will draw your Fibonacci from low to high. You will wait for entry right here, but see, we got stopped out by a few pips. How many pips are these actually? That's 0.3 pips. So stopped out by 0.3 pips, and price was straight towards TP. Same thing right here. So there's a clear example of how your trade can hit your SL at break even. So look at, we were pushing upside, structural low, structural price broke the structure. All right. So this was a liquidity grab right here. This liquidity grab took out this previous week high as well. So we had a clear push down. We had quick momentum right here. All right. Broke structure, liquidity grab. At this point, we'll draw a Fibonacci. We'll wait for price to tap in that. So as soon as price tap that, we'll wait for an entry. So as soon as price hits the TP, 1:2, we'll close our 50% partials and we'll move our SL to break even. Now after hitting our TP1, 1:2, price goes up and hits our SL break even. At this point, you know that you have lost nothing, but rather you have gained a bit. All right. So gaining a bit is definitely better than losing something. All right. So yeah. So good momentum right here. this was a good momentum. This was a good momentum, but price failed to break this low. All right, look at this low right here. The price failed to break the structural low. It went up. It mitigated our 61.8 ratio, and then it continued to push downside. So we're not taking that trade, but yeah, that's a good thing. Like this was a clear liquidity hunt right here. So price shows momentum, broke the structure, a, a good liquidity hunt right here above the Asian high, but price never, goes back to our 60.8 before the next Asian range starts. So yeah, that's I guess that's pretty much examples that can clear you. So I had one example as well. Uh, when Jay was explaining multiple confluences, I noticed that, and I want you to explain that as well. What what is this? Why is so gap? Do that on the All right. So, if you have attended the first session where Jay lauded Wyckoff, Elliott Wave, SMC, and different types of methods to trade. So let's just try our setup and see if we have a good setup right here as well or not. So I mentioned that we have our rules for Asian range, but definitely if you get a hand on Asian range and you want to take more trades, or obviously if you are a swing trader and wants to do a swing trading, then you can do that. But for that, you really need to have a good grip on liquidity and market structure, because in that specific Asian range setup, we just have to count the simple, the last structure, and the Asian range liquidity. But when you are not trading the Asian range liquidity, but rather some else liquidity, then things get complicated. So definitely, if you get a hand on that specific pattern, then you can trade it advanced on other liquidities as well. So look at this right now. So that was specific pattern right here. All right. So we have a clear liquidity hunt above this trend line. All right. This was a rising wedge or some sort of consolidation right here. So we had a clear liquidity hunt right here. That was not a structure break. Why? Because look at the immediate tap back, a push down within the range. So we have our liquidity grab rule number first. We have a break of structure right here. We have a good momentum right here. So we draw our Fibonacci as soon as this candle, like maybe this candle. So we have a swing low form. We draw our Fibonacci golden ratio. Look at like how it's tapped 6.8. It was a bit in drawdown as well, but regardless, it hit our TP full CP. So we will just an estimate, approximate. Maybe it was right here. So that was a beautiful CP as well. So that was just an example when Jay was explaining his stuff on this specific structure. I noticed that and I thought I will explain that later on as well. So um, I mentioned in the start that I would be going over some practical scenarios, and I would be looking at the hard time frame bias as well, like how can we use that to increase the probabilities of our setup. All right, so I'll just go over few examples, maybe one or two, and I'll give you an insight that how you can use that. So um, this was the candle right here that tapped our entry, so we would remove that. We don't know what happened next, but we'll see that how hard and frame uh, made us look into it. So for hard time frame, like you have your specific time frames, right? You have 15 minutes. It was 15 minutes, sorry. So yeah, you have 15 minutes for your entry purposes, and maybe if you're using 15 minutes, then the possible good higher time frame can be considered just 2 hour. All right, so you can use the 2 hour as your higher time frame. Now, I personally use that, but obviously, when you are doing back testing, you would see some better things. Maybe I was not able to see them, but maybe if you do that, you might be able to see them. So you can definitely add that to this specific trading plan as well. So let's just go to 2 hour time frame and see like what was uh, higher time frame saying at this point. So that was the move, and we do not have an entry yet. But let's see what the higher time frame is telling. First thing first, look at the macro structure. All right. So we had a clear break of structure right here. Oh gosh, I think I'll just need to explain that through cursor. So we had a clear break of structure right here. All right. So that shows that the price is bearish at the moment. All right. So next thing we do that. So Jay really explained the trading ranges, the premium discount ranges in detail. So if you haven't watched that, make sure to watch the previous recording as well. So we have our trading range right here. All right. So this was a discount level and this was a premium level. So obviously if price is in the premium level, we want to sell the price. All right. So we have two confluences at the moment of our higher time frame. That is, we have a break of structure, a macro break of structure. Like we do have some micro break of structure right here, but we have a macro break of structure. First thing. The second thing, the price is currently in the premium, has tapped the premium, and we could look for possible short setups. All right. So next thing is about momentum. All right. So next thing is about momentum. Like uh, see right here. Um, where's this? All right. So when prices, we want to go with the momentum as I previously mentioned. Like if the momentum is strong right here, we want to go with that. But when it comes to the pullback, the retracement back in inventory, does that need to be momentous? Like you may ignore that, but a suitable, an ideal situation is that if the price is correctively pushing back inside the range, then that is something good. All right. Now I'm not making that as a rule, but we can't have like too many rules to follow because we definitely would have our itchy hands in the trading plan. So that's not proper loop, but just for a higher time frame, because on higher time frame I don't have specific rules. I just use my own experience of viewing the market and I go according to that. So that's something which you can use on higher time frame. So look at the momentum right here, that was pretty strong, all right. But look at the correction back within the premium range. Is it momentous? I don't think so. That is a bit corrective, all right. So we have our confluence number three, which is the price is correctively pushing back, and that shows that the momentum is still in control and price might be able to push down. So rule number four, confluence number four, which I see on this specific trade, all right, and that is an engulfing pattern. All right, look at this engulfing pattern. Like if you are in my channel, you probably know that I used to I like to play with the candles anatomy as well. I was a binary trader when I first jumped in my financial markets, so I really knows how to play with candles, the anatomy behind the candles. So if you are able to predict the next candle on a higher time frame, you might be able to predict the move that should be occur on lower time frame as well. So for me, this engulfing pattern is definitely a strong pattern, and the price might be able to push downside. So we have four confluences. So moving down to the fifth confluence, which I find here. So look at this high right here. The price clearly liquidated that high, and after the price liquidated that high, we are seeing a good momentum that shows that price has grabbed the fuel which it needed to push in any direction. All right. So that is how you actually use the hard time frame to increase the probability of your setup. So I just went over one example. Now let me just go over a few more. Let me just go with the one that has had loss. All right, so we had a loss here, and we'll see like what can we find here. So we had a long setup, all right, and we'll see like how can we. Obviously, this is hindsight, and I can show you hundred of things that can be, that can be shown on hard and frame that shows that the price is still bearish or stuff like that. But when price has played like that, you have to journal your trades. Like you have to collect your data, that the trades you have took, and like the reasons why this loss has specifically occurred, and how can you avoid that loss in your future as well. All right. So um, at this point, uh, where was all right. So at this point, you know that your Fibonacci has been placed. Oh, I, so that was the reason why my Fibon was upside down. I just noticed that. Alright, so we have our Fibonacci place, and we'll jump to our high time frame and see like what do we actually have. Alright, so the first thing I can see is the price is bearish at the moment. Alright, price is bearish. So we as the macro time frame is showing you the price is bearish, so we might want to go for that. Alright. The next thing, like that is something that can be added to avoid this specific loss. But moving down to the second thing, let's just draw our trading range. You can see we are in the discount range, and from discount range, you it's the buyers are preferred. All right, so that is against something like that confluence that the price should be heading to the upside. But obviously, it was a loss, so that that is something that was what do we say that uh, yeah, just leave that. I'm not able to explain that what I wanted to. Uh, so yeah, so there we have one confluence that was telling us the price is pushing to the upside, and we have another confluence that was showing that the price is likely to push to the downside. All right. So looking at the next thing, which I noticed is, look at this equal lows right here. All right. So we had these equal lows, but we also have this liquidity grab as well. Few pips. Maybe if you can do that, we have a liquidity grab right here as well. So we have some opposite scenario as right here. So we really don't have anything else, anything to add from this perspective, from this liquidity hunt right here. All right. So let us see if we have anything else to add. All right. So basically, in my first session, explained that uh, I picked the zones. You know, where is that? I picked the zones which have took out liquidity, broke the structure, and left the imbalance. All right, the higher time frame zones. All right. So I want to explain that, but I explained that in my first session. So if you haven't watched that, you can watch that as well. So I explained that the hard and firm POIs provided of interest are the ones which have grabbed liquidity and which have broke structure and which have the momentum as well. So just a bit of irregular example is this. This wick right here took out this high. Price is still like, let me see if I can refine that wick, or is that wick still on 30 minute. That was the wick. So we had this specific wick right here. see like how it grabbed the liquidity right here. It broke the structure and it has momentum right here within this range. So we can consider this the hidden order block, and we have our higher frame zone as well. So if you notice, price is still within this range. Price is still reacting. This order block, this hidden order block, is still holding the price. So that shows that the sells should be preferred. Like if the price, if the price is still within this hidden order block, then the sells should be preferred. So that is like uh, that's just a bit of example, like how can you use your high time frame to increase the probability of your setups. Like that is how I actually use that. I write down my confluences, and wherever my strong confluences are, like obviously uh, not all not the number of confluences doesn't matter really, all right. So you have to build a story like if these are the confluences, are these together strong or are these together weak, all right. So you have to identify that. So for me, like if the price is still within this trading range and the structure is bearish, and we have some an equal liquidity grab above and liquidity grab below, then that shows me to some extent that price might be pushing to downside because we have some favorable gap right here as well. So yeah, that's how I view that, all right. So yeah, that's what pretty much how you can confirm your or increase your probabilities of the trades which you're checking, and from higher time frame perspective, how can you refine that and increase your probabilities. So let me see if I have anything else to explain. Um, yeah, I'm pretty much done with the setup and the rules, the schematic. I have explained several practical scenarios. I've explained everything. So till now, if you have any question, just write down in the comment section, in the chat box, or just unmute your mic, and uh, I'll try to answer that. If you have any question, you can ask me in the chat box, or you can unmute yourself. Yeah, Peter, sure. I've told you the way. Now it's up to you. Like you need to backtest it. You just can't blindly place trades on the live account after you have took out the webinar. It's really important to backtest and get familiar and comfortable with the setups you are trading. So yeah. Yes, Samuel. This specific setup is for intraday. All right. So one thing to mention, like I did mention that, but like if you have this setup, like obviously this Asian range has formed, and we are waiting for a pullback in this specific zone. But instead of a pullback within this Asian range, another Asian range forms. All right, in between here. So that previous setup is now invalidated, alright? So you want to have an entry before the next Asian range forms. You don't want to have an entry like one Asian range forms, two, and then price comes back here, and then we'll check an entry there. No, we don't want that. You have to have an entry before the next Asian range forms, alright? So that is pretty much an intraday setup, and you can trade that. Any further question you can ask me. Jay, are you there?
Yeah, I'm here. I'm here.
So I think, does it matter if the trade gets to the POI late London? No, it doesn't matter. Just we have I've told you the rule. Like, if if any time the price comes back in this PY before the next Asian range start, all right, before the next Asian range start, you can execute your trade. But as soon as the next Asian range starts to form, this setup is now invalidated. Yeah, Millard, actually, I was really frustrated by selecting different POIs as I mentioned. Like, I just didn't knew what to select, like break block, mitigation block, Quasimodo level, order block. I didn't knew that, so I just had to make it simple because simple things are what I like, and I try to keep things simple, and that is it.
All right. Is there any further questions before we continue? Do you have any other questions or any other um, basic points you would want Rena to look into for you? For me, I would say time and trading sections are a whole different level in trading. Okay, it's a different method which I think should be studied with time. Okay, you need time to study that. It's not something you just learn all the way. He has given you the basic knowledge, and from this, if I was asked, I understand that the Asian range are basically liquidities, right? And then the London section and the New York section are the London section is a possible mitigation section, and the New York section is a possible retracement and a re-entry section, or probably a reversal section, right? So those are the basic concepts of sections, trading sections, using them as a confluence in trading.
So, Sega,
Yeah.
just excuse me, Jay. Sika, we really don't have to do that. Like, we just can use that as an extra confluence. All right, higher time frame. We can use that as an extra confluence. Like, if you think what you are predicting on the higher time frame is really accurate. If you think what you are analyzing on higher time frame is good, then you can definitely use that as a confluence. Or maybe if you don't want to do that, but if you have any other confluences which can increase the probability of this specific setup, then you can definitely use that. But the main foundation is the setup, and you can't avoid any of the rules specifically I've placed in this webinar. Over to you, Jay.
Okay. I never knew he asked the question, so luckily you saw that. So
No
what I
worries,
was
no worries.
saying was um time and sections in trading is a whole different confluence in trading that you take your time to study. For me, I have personally studied this, and I use it in my own way, which I don't mind sharing my knowledge of how I use um, time and sections of trading. So when could I share my screen?
Sure.
Today I told you guys we're basically going to be starting with strong highs and weak lows, and the weak lows and the strong highs. But I section of trading which when I was going through over there that I think everyone should understand and have a confidence about. Okay, so if you're going to be trading and then you want to use the sections and the time to trade, is something that you know you should have a basic knowledge of. All right. So even if you're going to be using the Asian range, or you're going to, I do use them. I won't lie. I do, hunt for Asian range because I do understand that their liquidity. But even if you're going to be using the Asian range or probably the New York section entry or the London section entry, you have to understand one thing. The ICT key zone is a good indicator you could use to identify those times. But then you could use that. You could also do research, watch these videos, and understand the key zones and all. But even if you're not going to be using that, for example, let me turn on my section separator. The break section break. Yeah, that's it. Then with this you understand that I'm just using the basic rules, without no indicators or anything like that. To explain how possible you could use the Asian and then the London and all. You understand that this is the intersection between the 2 days, right? So let's say this was Monday, it should be Tuesday. So this is the intersection between the both of them, which means London, New York should be around this zone, and this should be London, while this is Asian. So if this should be Asian section, you should have the Asian range around this, right? So this should be the Asian high. Okay, and then this would be London, right? London is likely to mitigate the zone. I told you guys. You could write that down. Asian section is always the liquidity using the accumulation, manipulation, and distribution, which is how I use mine. Asian section is always the liquidity. London section is the manipulation, which is likely to mitigate a zone and then break structure. Then New York section is likely to give a reversal or a retracement into a possible entry on the mitigation of London. Is that understood? Or should I repeat myself? Should I say it one more time? Or you guys got that already?
Please, you can say it one more time.
Okay, so you all know the manipulation and accumulation stuff, right? The accumulation, the manipulation, and then the distribution stuff. So this is how I use mine in the same time using sections. Okay, so this is the accumulation, this is the manipulation, and then this is the distribution, like you all know. But in my own way of using this, I understand that this should be the Asian section. Okay, price should be accumulating during the Asian section. Then London is likely to cause a manipulation, which could take out the low or the high of the Asian section based on the direction of the trend. And then New York section is likely to give a retracement, probably into a possible POI, which price could move in. And how do you know this spots which price could be reversing from? Using time, you could use ICTQ zone. If London retraces, if New York retraces into London's POI during ICTQ zone, you could use that as a very good confluence. And then if London is causing the manipulation, which is clearing at the Asian low, doing ICTQ zone, you could also use this as a confluence and wait for probably a change of character or a break of structure from here to probably wide wise to clear out the Asian high. Okay, so this is practically how I use my accumulation manipulation stuff, and then same time use the ICTQ zone. I don't I don't usually wait for them, to play out, the ICT and all, but then I use it this way. Now let me give you all an example from the live charts. You understand that now, right? Or should I still explain myself one more time? That's understood, right? Okay, so let's continue. Now let me give you an example of that. So currently we see this. Let's say this was a change of character. Okay, you guys can still hear me, right? Let me know my network is still okay.
Yes, we can hear you, Vijay. Continue, please.
Okay, okay. So let's say trying to hold my screen and it's not working on that. Let me okay. So let's say this is a break of structure, not was, but probably, or we could say a change of character. Okay, character. And then we see this as a supply zone, right? Where is the possible POI within the supply zone? We know this was a mitigation, right, of another block. This is another block. And then within this zone, we could probably see another block, this area, right? So we're expecting price to move back into this demand zone if it's an uptrend, because we see this block of structure, and probably we're expecting price to clear out this inducement, which was actually cleared out, right? So this was an inducement for this demand zone, and then price clears out the inducement, which this becomes our potential target, right? Which is the high against the current trend of the market. So this is useless. We will have no use of that anymore. neither do we have any use of this. And then you could see this is clearly the Asian section, right? And then this was London, which caused the manipulation, which takes out the low. You see, this was an accumulation. Price was accumulating, probably using 2 days to accumulate. But at the same time, you could see clearly this was. Let me just use the section stuff, to explain not accumulation, manipulation, and all. But then this was London section. Price accumulated, and then New York gave. Sorry, London gave a manipulation, which takes out the low. And then you see London takes out the high, the Asian high, which is a change of character. You see, of character. You guys are following up, right? And then we know this high is a target, right? And we see price is now creating relative equal highs, which makes this the potential target. And then we see this as internal highs, which respect price to clear out, right? So the internal lows, internal lows. So now we have the Asian section of the next day, which is presented right here. Okay. So now what time is this? What comes next? London. You see, we're expecting a mitigation of the demand zone, sorry, the discount of this range because change of character which we had over here. And then price traces back into I guess another block on the lower time frame of that POI. Trying to look for it pure and clean so it's more understandable to you guys that this stuff I'm telling you is not actually being formed, but is what I practically use all the time. You see, a hidden order block is presented in here. You could see the fair value gap. So this would be probably my POI. And this was the inducements, right? So you could say the liquidity because these lows were potential targets. And then these were internal range lows, right? These lows are within the range. And this is our order block and this is our fair value gap. You could see there's no gap right here. Yeah, there is a gap over here with our POI, which you see did have a reaction, right? Which price filled the gap, but then did not move into a POI, which was still within Asian range. And now you understand that London is coming, which you all know London is a manipulation, right? Which is likely to move into the POI. And you see this stacked up liquidity being presented right here, right? So it's a clear red flag of this entry. Now back to the 1 hour time frame. Price moves into a POI within London. Okay, so this was London which did this manipulation. You see, the same way it did manipulation over here, moving into this POI, London still moved into this POI, which took which takes the mitigation, right? Like I said earlier. And then this is a random example, okay? This wasn't planned. This is the current chart of GBP USD. I'm just giving you my method, which I use practically every day or every time I want to trade, depending on the scalping, because this is a strategy which is used for, you could say, intraday trades, right? Because it's section. So now you see this is practically ICT. This is practically using ICT method, and then using that as supply and demand because I haven't touched this mentorship completely, so I wouldn't say I'm teaching ICT. So you could see Asian section, which London clears out the low, and then mitigates our POI, clears out the high. You could see here price clears out the high, which causes a change of character, and you could see New York gave a retracement, which gave a potential re-entry. You see, so this was New York. And then at the end of this, I'm going to still use an indicator to identify these days. So, you see this is not just forged, but then it's practically understandable, not even using an indicator, but then, understanding the time of the day. So you could see New York gave a potential re-entry, which price retraces back into the premium of this range. Remember, this high is our target, right? So we know this is an entry opportunity. This is a change of character, and we are not against the higher time frame trend. Trend is bullish. You see, that's why we're now paying attention to time and price. Okay, so now you see price. New York gave a re-entry into a potential POI on the lower time frame, I guess. Yeah, you could see this was the liquidity. Let me delete this. Then delete this. Okay, so you could see clearly that this was the fair value gap, which was practically the closest to um, the inducement. This was the liquidity which was being induced. The QM set up and everybody was saying that. So London gave a entry into this IPA candle, which is right here. Okay, or then you could still, if you're wondering why did I look lower, yes, I would. This would be also liquidity. Yeah, this is also liquidity, which I expect price. If this doesn't hold, if price doesn't clear this low and reverses, I expect price to clear this low and then give me a re-entry. But then there's no fair value gap within this, right? This is where the gap is presented. So this becomes a POI. I will expect price to reverse from here. Sorry guys, there's someone at my door. Give me a minute, please. Let me just attend to that. I'll be back in a minute, okay? 1 minute, please. Okay, I'm back. Yeah, Peter, accumulation manipulation. Yeah, that's it. So I'm just using this to, show you how I use my section and then, with the Asian range and stuff. Everybody has the different way of using this, okay? So I haven't watched ICT, like I said. This is just practically how I use them with my understanding of time and, you know, sections if I was to enter the trade. And this was a little knowledge which I got from ICT, from the little part which I watched. Because if you ask me, the important part of ICT, which anybody should pay attention to, would be how he uses his time and also, you know, the Q zone, because that is the most important stuff, not the other block and all. But then this would be the liquidity within this range. I would focus price to clear because there's always a PO. Like I do say on my mentees, there's always the first PO I presented at the 50% and the second at the extreme. So this was the POI that was presented with at the 50% with the liquidity above. And New York gave that retracement. So if we were to be trading GU, this would have been our first entry with this knowledge which I'm sharing with you right now. And then your target would be this high. You're probably with your stop loss placed here, or probably waiting for a reaction. You'd have something like this. But then let's say a stop loss was placed right here. So this would have been my first entry. And then price clearing at that low, this would have been my second entry. Okay, let's say this, waiting for a reaction and all. This is my second entry with my target right here. What do we have now? We see price did a change of character again, right? And then another Asian range is being presented right here. You see? Now the Asian high has been cleared, which is also another change of character right here. We have this liquidity being presented below this. But then these are relative equal lows. What do we do when we see those? We wait for price to clear them out for taking a trade, right? So these are all inducements. And if I should have a POI on GU, which I'm expecting a reaction, it would be within this right here. Okay, so probably I would have closed this and then wait for price to give me an entry in this within probably London. Because if I do see another Asian range, which is being formed right here around this, then this is just a pool of liquidity which price has to grab. Okay, so shutting this down, or probably taking out this low because or probably taking out this low because this low is an internal range liquidity. Because right now we have this overall change of character over here, right? And then price could be returning back into premium of this range. And where is the liquidity within this range? It's this low right here, and then this low. So price could be returning back to mitigate the 50% POI, which is this, or the stream, which is this. So waiting for a reaction from here, or waiting for a reaction from here would be the wisest thing to do. If price doesn't clear out this high, right? But if price does clear out this high, then it's a take profit, then wait for reaction for the next movement. So you see, this is how I use the accumulation, manipulation and stuff, matching it with time, section and then matching it with kill zone. And if I was to use ICT kill zone, let me look for an indicator, which would be, let's say, kill zone. I don't know which is good enough to use, but then let's see this one. No, 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 this doesn't make sense. No, sorry, my bad. Let me pick another. But there's no need for that. We don't have much time, so you could match that with any of these. You could see this will be presented as the Asian section, and then the London and New York and all. So that is it. And now let's go back to the normal topic which we have for today. But before that, does anybody have any question concerning what I just said? You want us to treat, or refresh about? Does anyone have any question? For the second entry, what happened at Syria? Yes, yes, you have a point over there. So, does anyone else have any question in this section? Where? Oh, that's an indicator. That is good. Let me see. So, if we should do that, you said reading section by who? Oh no. Okay, this is the one you spoke about, right? It's not popping up. It's supposed to be my screen right now. Oh, okay. So it's up. I don't know. That's I don't know how to use this. So the guy who recommended this, please, could you tell us which is presented as London, New York, or all? I don't know. I don't know how, but I think the word means Asian, right? Hmm. Okay, so let's just say the word means Asian because you could say it presented within the blue. All right, so this is Asian. This is New York. Sorry, London. The blue is London, and the yellow is New York, right? Well, now, what do you think, Bo? I haven't used this before, so I'm just assuming.
I have no idea, bro. I don't use the kill zones and neither do I use the indicators such as this. I have no idea.
So I think they're presented within the marked up box, and as expected, this was London, as like I said. So this should be Asia, London, and then the yellow should be New York. You see, like I said, New York gave away entry, which happened here. So this should be New York, London, and Eastern section, right? So the same thing happened over here. Let me delete this so we'll see. Mark the spots so as I take out the drawing, we'll see if it makes sense. So you see, accumulation, manipulation, London, and potential this retracement or reversal, which is the distribution, right? So same thing happened over here too. Accumulation, manipulation, distribution. You see? So same thing probably expected to happen today. You see it over here, accumulation, accumulation, manipulation clears out the high, and then distributes back for potential re-entry. You see? So that's how it's been. That's how I use it. That's not how everybody does it. So that's how I personally use it. So does anyone have any other question concerning this? Thanks for your help. Um, Mohammed, I really appreciate it. Thank you for sharing the indicator. Enable the title. Does anyone has any question? Any other questions? Okay, so since no one has any other question, let's get to what we have for today, and then we could run this up. Okay, so today I'm going to be sharing with you guys my knowledge on strong highs and weak low, other blocks, and how to use the fair value gap, or how I use the fair value gap. Because everyone has their own method of trading.